Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is our 92nd episode, Bonds Explained. Okay, as you can see here, we are still respecting social distancing, so I am your solo host for now. We're looking forward to potentially bringing Corey back here in the coming weeks. If you're also watching this on YouTube, thank you as always for tuning in. My haircut place, they closed on me, so hopefully they'll be opening up here in the next couple weeks. So my hair is still long and we persist. But for today's topic, I wanted to talk about bonds. Bonds are something that I speak a lot about. I invest in a ton of bonds, and I use that term pretty loosely. And if you're just now starting to follow our content, I think it's important that maybe we rewind it here a little bit and I explain exactly what I mean when I'm referring to bonds. So first, I just wanted to define what a bond is in our opinion. Again, there's probably a technical definition out there, but for us, simply a bond is a loan investment. See, in the investment world, you can either own or loan money. And owning would be buying stocks. Loaning money is a bond. So you would take your capital and instead of buying, shares of XYZ company, you loan it to XYZ company. They use it for capital improvements or to buy other businesses or whatever they deem appropriate. And in return, they pay you interest. And then it's some predefined time frame, 1 year, 5 years, 10 years, 30 years, however long that may be, they agree to pay you back your initial loan. And that's what it simply is. So you can just think of a bond as a loan. By their nature, they are typically safer because they are ahead in line. If a company does go bankrupt or has financial troubles, a bond typically will get paid out before a stock holder. And so again, you want to own bonds because they're typically safer, they're a loan investment. Now, a drawback to a bond is that they typically don't grow as fast as stocks, right? A bond, in a low interest rate environment like we are currently, might only pay you 2 or 3 or 4%. Whereas when you buy a stock, you've got unlimited upside potential. A stock could theoretically go up forever. And so you don't get the upside participation, but you trade that off for safety and a predetermined, typically defined interest payment. So if you say, I've got this amount of money, I want to make 3% on it or 4% on it, I know it's going to be safe. That's what we use bonds for. So that's what a bond is. And again, I've kind of already alluded to why do we buy bonds? We buy bonds for markets like we're experiencing currently. The bond market, as defined as the Barclays Aggregate Bond Index, which is just an index, you can think of the S&P 500 as an index. Well, the bond market has an index, and there's actually a ton. The one we typically look at are the Barclays Aggregate Bond Index. It's up this year around 4% as of the recording of this show. Again, that fluctuates every day like the stock market, but it doesn't typically fluctuate as wildly as the stock market does. So the stock market's negative this year, the bond market's positive. And we like to see that because we get some diversification there and that dampens the downside if your stocks are down. Also, the second reason to buy bonds, not only for their safety, but it allows you from a different asset class to pull from in retirement. For example, last year stocks were way up. So our clients that are retired, as they pull money out of their accounts, we're typically selling stocks because they're high. Well, this year their stocks are down and we don't want to sell stocks when they're low. So what we're doing, we're pulling from their bonds if they need income or if they need extra income, and they're up. That's why we like having bonds in the portfolio. Not only are they somewhat safer, especially investment grade bonds, as we talk about bonds, there's all different types, of course, but we like to buy investment grade bonds. Those are typically safer than individual stocks. And then also we get some negative correlation there with the market. So when things are down in stocks, we like to see it when bonds are up. So I've defined what a bond is, why we use them. Well, how do you go and get them? There's a ton of different ways to get bonds. And I'll tell you, in my opinion, ways that, first off, that you should not buy them. I do not believe you should be buying bonds through mutual funds or index funds. And this is why. You can think about buying a bond, again, it's just directly loaning that money to that corporation or entity or whatever that may be. Well, when you go and do it through a mutual fund or an index fund, you're grouping your money, or you're pooling your money with hundreds, if not thousands, if not potentially millions of different investors. And the issue I have with bond funds is that if those other investors need to liquidate their account for a different reason that doesn't pertain to you, and bonds, I mentioned that how they're up this year, where they also can be down in value, and those bonds happen to be down in value, well, that bond fund manager will have to sell bonds at a loss, locking in a loss on your return, which may or may not be the case for you. You may not need to sell bonds at that instance. So I don't like pooling investments, certainly when you're buying bonds. So for our clients, we literally buy them individually. We buy bonds directly for them, and we don't pool their assets. So that's number one, is don't use a vehicle. Again, this is my opinion. I don't like using bond funds for that reason. Also, there's fees. Who wants to pay extra fees when you don't need to do that, when you can just go directly and buy the bond? So that leads me to my second way to buy bonds is through a fiduciary advisor. I would not be using a broker to buy bonds. And the way you can tell if your advisor is acting as a broker is if they're not charging you an advisory fee on the bond account, they're probably acting as a broker. And what this means is they're charging you a commission anytime they buy or sell a bond. And some people may argue, well, so what, Jake? What's the matter? I understand my broker's got to get paid. They should charge me a commission. Why would I pay them an ongoing fee to do a one-time transaction? And I'll get into that a little bit more here in a moment. But the reason is they don't have a legal responsibility to act in your best interest when they're acting as a broker. And I know this because I used to function as a broker. And so I'll give you an example. There may be 20 different bonds for them to choose in their inventory, and their boss may have different price points that they get paid on each one of these bonds. And so they'll go out there, and the natural thing for a broker to do is to say, well, which one's paying the most, and if these bonds are similar or close enough, they only have to follow a suitability standard. So they don't necessarily have to buy you the bond that's in your best interest. So I don't like that. And also, you're paying a markup or a commission to buy a bond where that's not the case. So if you're working with an advisor who's not charging a markup and is acting as a fiduciary, for our clients, we don't charge a markup. So there is no incentive to buy you ABC bond over XYZ bond. We get paid the same no matter what we're investing in. So it doesn't matter. We're literally doing it because it's in our client's best interest. And there's also no markup or sales charge or any of that going on. So you don't have to worry about those hidden fees. Or now they're supposed to be transparent, but I would argue a lot of people that are paying them probably still don't know what they're paying if you're working with a broker. And then the third point on how to buy bonds is so again, I wouldn't use a product. I would buy them directly, and I would go through a fiduciary-minded advisor. And then the last thing is I'd work with somebody that's independent or not a employee of a bank. And again, nothing wrong with the banks or their employees. The issue is, though, when you're working under an umbrella of a bank, you're typically going to have to only buy bonds from your bank's inventory. Whereas with us, since we have an independent viewpoint through Hightower's network, is that we can go out there and we can shop the whole market for bonds. So we can buy ABC bond, that may exist in several different places, and we can go and shop price and get our clients the absolute lowest or best price for that bond versus just what we have in Hightower's or Falcon Wealth Advisors inventory. I don't have an inventory, and neither does Hightower. We go there and we shop the whole market. We will pin banks against each other or holders of these bonds and have them compete for our business on behalf of our clients. We're able to buy bonds at much better pricing, in my opinion, because we can shop, and it pays to shop, as everybody knows out there. Okay, good. So that's how to buy bonds in there and ways to go about doing it. Again, just work with a fiduciary-minded advisor that's independent, that's not putting you in a product. To me, it's very simple, but I thought it would be pertinent for today's show to explain that. Now, the last point I wanted to make about bonds is that they aren't, in my opinion, they're not a buy and hold vehicle. You don't want to just buy a bond and sit on it to maturity. In some cases, that may make sense, and many times perhaps it does. My point is that at times you may need money, or at times a bond may appreciate in value, and you may want to sell it. So again, bonds we look at definitely not trading as actively as stocks, but it's certainly not an investment that you're typically going to sit on and just hold forever. If you buy a bond that's going to mature in 20 years, You certainly have that right to hold on to it for 20 years until it matures, but you also can sell it and you can trade it. So if that bond has appreciated in value and we can sell it and we think there's other opportunities somewhere else, we are certainly going to do that. Also, if your bond, particularly in the environment that we're currently in, if your bond is at a risk of going default, you might want to get out of it and cut your losses, right? I mean, there's certain companies that are more than likely going to go bankrupt, and if you have a bond in that company and you're nervous about it and you want to get out of it, you certainly should probably do that if you're worried about it going out of business. Again, we buy bonds because we like that they're generally safer than stocks. Also, they mature and you want to reinvest them. And so again, there's all these different reasons to buy and sell and hold bonds. My point is it's very custom to you and your financial plan and your portfolio and what's going on. And again, because we're not charging commissions, we can trade bonds for our clients and not worry about hidden incentives or commissions being generated. So again, just realize that a bond is not necessarily that you're going to own until maturity. You might need to sell it. You might need the money. It might be appreciated. Something may be going on with the issue that needs to be reviewed and adjusted. All right, so that's the wonderful world of bonds as it stands, again, from my opinion and the way that we do things at Falcon Wealth Advisors. We plug into institutional research so that we can track our bonds and monitor them, and we'll trade them if we need to. And our clients know that we're out there shopping on their behalf and we're not charging a commission to buy or sell bonds. And they belong in a portfolio, particularly, not in every portfolio, obviously, but particularly for the retiree, someone in or near retirement. Bonds are a very important component, and we take that very seriously. The media and everybody love to talk about stocks. They're sexier, they're more exciting. But bonds are kind of where it's at. It's very important. They're the ones hitting singles and doubles, and they're the ones paying interest. And when we have moments of stock market volatility, we love seeing the bonds rally a little bit or at least hold their values. Okay, so that's all I have on bonds. As always, you can find me out there on social media. So we're on Instagram, Twitter, LinkedIn, and Facebook. If you're watching this on YouTube, we really appreciate it. Our subscribers continue to increase. And if you're listening to this on your favorite podcast platform, we really appreciate our audience. And we love all the feedback and questions that you may have. So I'll flash up my email on here. Certainly if you have any comments or questions for me, don't hesitate to reach out to me. My email is jake@falconwealthadvisors.com. And for our fun topic, I wanted to talk a little bit today about my anniversary. So I'm recording this the day before my 3rd anniversary of being married to my wonderful wife, Rachel. I'm an extremely blessed guy. It feels like we've been married so much longer than we have. I don't know if that's a good or a bad thing, but I'm really a lucky guy. I love my wife so much. We've really had an enjoyable 3 years, and I can't wait to see what tomorrow brings or the next day or whatever that may be. We've got Einstein in there for you that know me, our lovable pooch. He's a lot of fun and he's got a ton of personality, and that's been a real joy to bring in. And hopefully, maybe down the road, maybe kids will be in our future, but who knows. But celebrating our 3rd year anniversary, the gift is leather. And Rachel and I have kind of ping pong back and forth of what we're going to get each other, because the gifts that we want to get each other are expensive. She wanted to get me a leather briefcase. I've got one already, and actually the one I have, I bought, believe it or not, the day that I proposed to Rachel. So there's some sentimental value there, but the one she picked out's pretty cool, but it's pricey. And I want to buy her a fancy purse. It's really expensive as well. So we're both kind of like, we like those things, but do we splurge? I don't know. So stay tuned on that. We haven't decided. So that I'll leave you. Again, we hope all of you are staying healthy and safe, of course, during this crazy pandemic. If you have any questions, reach out to me. And as always, have a great week.